Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting from the monthly time frame, what do we have? Now, from a monthly standpoint, we can see how the market has tested this very strong historical support and demand area multiple times, and every single time that the market tested it, it immediately rejected it to the upside. So from a monthly standpoint, everything seems quite bullish, and we could expect more bullish continuation. However, if we look closer, we can also see more details. We can notice, in fact, how in creating this move to the downside, the market has essentially created a correction after a quite strong impulse. And if we are to identify the pattern that the market is creating here, we can notice how we have the possibility, if from here the market will create a move higher, to have an inverted head and shoulders with the left shoulder here, the head here, and the right shoulder here. From a pattern standpoint, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how at the moment the market is about to enter the area in between the 50% and 0.618 Fibonacci retracements, which is also this previous level of monthly support from which all this move to the upside was created, meaning that actually we have confluence of support inside of this zone, which this market could create a deeper test of, so we could see some short-term bearish price action into the zone, but then in the long run, there is a good probability to see a potential rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how the market has just created this M pattern. Now, in general, after the creation of an M pattern, what we could expect is a potential move higher for the completion of the M pattern at the neckline, so the previous support turned resistance from a weekly standpoint. Now, if we want to identify the completion zone of this M pattern from a weekly perspective, it is exactly here. So this level of previous support from which this green candle was created, which is now turned resistance here, and which at the moment would be the completion zone of the pattern itself. Now, we can also notice if we look at what level the market is approaching, we can notice how this zone here is a quite important zone for this market. It was acting as the previous resistance here, was turned support here, and at the moment it is still acting as support. So there is a good probability if the market will head into this zone that from here it could then be rejected to the upside. So the weekly time frame as well seems quite bullish. Now, dropping down on the daily time frame, what do we see? Well, from a daily perspective, we can notice how first the market started with a quite strong impulse to the downside, then we had the correction, then the market continued lower. However, at the moment we're getting a lot of sideways movement while the market is moving lower. Now, usually this is a form of deceleration of a market because it means that essentially sellers seems to be losing the control of this market. Every time that they manage to create a new lower low, immediately buyers hop back into this market. So there is a good probability that if the market will continue lower from here and go and approach all the confluence of support that we have identified from the higher time frames inside of this area, that the market could then be rejected to the upside away from this zone, potentially completing the M pattern that we have previously identified on the weekly time frame. Now, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. Now, first of all, we have to keep in mind that if we are checking the data for the euro, we are actually already checking Euro USD because all currencies on the spot are traded against the USD. And what we can see here is that with the very last report, net positions have once again started increasing. So institutions have just started once again moving back to the bullish side for Euro USD. In fact, we can see how with all the previous reports, we were seeing thousands of longs getting closed. And now longs are starting to get opened again from an institutional perspective on Euro USD. Precisely 5,100 longs added with the last report. Now, shorts are getting added as well. Net positions in the long run have decreased, so Euro USD is still weak. However, institutions just started once again adding longs as we are approaching the confluence of support that we have around this area. So I wouldn't be surprised if the market goes for a deeper test of this zone and then gets rejected to the upside. Therefore, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market at that point, I would expect a potential rejection to the upside, potentially completing that weekly M pattern that we have on the weekly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.